Welcome, welcome to a new edition of a new class from Pioneer Mortgage Funding and Partnership Realty. My name is Patricia. I am the branch manager for Pioneer Mortgage Funding, and we are one of the preferred lenders here in Partnership Realty. Thank you for being here with us today. And like I always say, like the people that show up for classes, it's actually the main difference between, the successful people and the people that actually don't really see the results, right? So thank you again for being here. I really appreciate you. And today I bring to you a very, very interesting program. It is a program for professionals. This is a very special and specific loan that is exclusively for professional people like, attorneys. So we're going to go through the list: attorneys, CPAs, vets, doctors. And basically the way that it works is that it gives them the opportunity to purchase a house with zero down payment and very good benefits. So without further ado, let's get into the class. Give me 1 minute. We're having technical difficulties. No, but I need my thing. So, like I said, this is a very interesting program because since it's for professionals, it's the way that I see it, it's a way to build up a high-end clientele from the ground up. That is, okay. Technical difficulties. Give me 1 second. Okay, so why from the ground up? There you go. Oh, okay. So now we're in business. Why from the ground up? Because if you actually get to use these programs to reach out to that high-end clientele, they're going to be your clients for life. And this is a very good way to do it. So I'm here, and my role in this company and in this, being here part of partnership is to give you tools and resources for you guys to be more successful, for you guys to have more tools to go out there and close more deals and have more success. So like I said, my name is Patricia Llanes. A little bit about me, and I know if you don't know me yet, I am with Pioneer Mortgage Funding. I am a mortgage professional, but mortgage broker. I was a banker for many, many years, and after being fed up with the system that barely let me deal with any clients, I decided that I wanted to become a mortgage broker. Because why? Because being a mortgage broker gives me the freedom to be able to help more clients, get loans. So basically my specialty is that I work with absolutely every client. And one of the main differences between a broker and a lender is that I am not one lender. I am a broker that deals with over 80 lenders in my portfolio. So that gives me the option and the ability, the availability to have pretty much every program available to you, and prefer to you. So including exclusive programs like this one. It's exclusive for brokers. So let's talk about this program, right? Okay, so the best loan for professionals. This is a loan that is, like I said, exclusive for professionals, but basically the main benefits is that it gives them 100% financing up to $1 million, 95% financing up to $1.5 million, 95% financing up to $2 million, and there is no mortgage insurance. So the lender pays for the mortgage insurance. That's a huge savings on your client's pocket every single month. Another thing is that the student debt from the clients, because these are usually people that come out of school with very high student loan debt, is not considered. So they don't have to take that into consideration when it comes into debt to income calculation. And basically one borrower only has to qualify. So let's say that it's a doctor that's married to somebody else and they want to qualify, they want to apply together. Only one has to have the certifications or the qualifications. So what are those qualifications? And I hope that you guys can help me read because I can see. So like I said, it has to be a licensed medical professional. It could be a resident, it could be an intern, and it could be a fellow. So that is super interesting to me, and I'm gonna stop a little bit on that first one because it doesn't have to be like an established doctor. Probably that established doctor already owns houses and whatnot, but you wanna make sure that you reach out to those people that are just fresh out of school, that are just doing the residency, but they have a salary, they have a job position, they have income, and usually a good income at that, to actually offer them this program. So medical doctors, doctors of osteopathy, doctors of podiatrists, optometry, dental medicine, so dental surgeons, dentists, optometrists, veterinarians, so vets too, attorneys, chiropractors, certified public accountants, so they do have to be a CPA, and they do have to be a doctor in chiropractor, you know? So physician's assistants and nurse practitioners qualify for this. So not an RN, but a nurse practitioner. But again, this is a way that you can expand your portfolio and reach out to new clients and new industries. You know, that's why I really wanted to like present this program to you today. Like, this program just came out, so I'm actually learning as I go, but I wanted to make sure that I put it out here to you guys so you can start pitching it and you can start, you know, building your clientele now, and we can do it together, right? Now, let's get into the guidelines of the program. There's an occupancy and citizenship requirements. So to be eligible, the occupancy and the property types, it has to be purchases only. It cannot be a refinance. It has to be the primary residence, and it has to be one unit. What does it mean, one unit? It cannot be a duplex or a triplex or a fourplex. It has to be one unit. It could be a condo. It could be a townhouse. It could be a single family residence. It could be any type of property as long as it's one, right? So the client cannot own multiple properties. So this has to be the only property that the client owns, right? So this is why I keep going back to, like, this has to be somebody young, somebody maybe that hasn't had a property before or that doesn't own a property that can take advantage of this, but it will be an opportunity for them, right? And eligible borrowers had to be U.S. citizens or permanent resident aliens. There's no IT numbers, there's no other, you know, you had to be a citizen or a permanent resident alien to qualify for this program. Now, there's down payment requirements. If, for example, they're buying over $1.5 million, and I'm going to talk to you a little bit because it varies 100% based on credit. We're going to talk about it a little bit further in the presentation. The down payment requirements, it could be gift funds. It could be funds from somebody, from a family member, even from a what's it called? Like a supervisor, like somebody that's, you know, mentoring them. You can do that. So it is 100% requirement. A minimum of 1% has to be from the client's funds. So let's say we're doing $1 million loan, but 1%, which is $10,000, has to still come from the buyer, from the borrower, right? Just to have in funds. From unsecured loans are not permitted towards down payment, closing costs, or reserves. So it cannot be like they borrow money from like an unsecured, you know, like a credit card type of thing to do this. So other requirement, this is what I was referring to when it comes to the 100% financing. It is 100% financing, but they have to have 720 credit score to get the 100% financing. If they have 700 scores, 7 to 720, then it goes down to 95. If it's 680, it goes to 90. So, and the qualifying guidelines is that it has to be approved through the system. So we have to run it through desktop underwriter, which is a traditional way, let's say, to approve any FHA loan or any Fannie Mae loan or conventional loan. It still has to be an approval, right? And there's loan limits, but basically, like we said, up to 100%. The qualifying ratios, and this is very important, has to be maximum 43%. What does it mean with this? When we talk about an FHA loan, for example, the qualifying ratios are like, you know what a debt to income ratio is? You know, the money that the client has to make in order to qualify for the payment, right? So it's the payment to the income ratio. So in this case, it's a little bit lower than usual. Like conventional loans usually go to 50%. FHA loans go maybe a little bit higher. So in this case, it's 43% maximum. So they do have to have, you know, some wiggle room, let's say, right? So hopefully they didn't get into like a huge debt. Other than student loans, we don't care about those, but like not a big car or anything like that, hopefully. Hopefully we get them before. So there are reserve requirements for this type of loan. So they usually follow Fannie Mae guidelines. What does this mean? The system will let us know if the client is a little bit of a risk, and then you need reserves. That's usually not the case when it's a 720 score client. So I wouldn't worry too much about that. But like I said before, the funds could be received from an employer, or a recruitment loan are eligible to satisfy the gift funds and whatnot. So let's say that somebody's recruiting them and it's giving them a bonus or a signing bonus. They can use that money to qualify towards, like, you know, the 1% that is somebody fresh out of school, right? So basically, they can be fresh out of school with a job offer, and they can qualify for this loan. Isn't that incredible? So, they know they're going to be signed up for a hospital, or they're going to be signed up for a law firm, or they're going to be signed up for a CPA firm, whatnot. So if the employment begins within 30 days after the closing date, they will just need 2 months of reserves extra, which means that they have to have 2 extra months of payments in their bank account. So reserves, anybody here knows what reserves are? Okay, so reserves, Okay, what are reserves? Yes. Yes. So reserves is money that the bank is not going to use, right? The bank is not going to touch your money, but sometimes the bank does it in terms of safety. Let's say, when the loan is a little bit of a high risk, like a foreign investor or this type of loan that is 100%, the bank says, you know what, I'm going to give you the money, but I want you to have just a little bit savings just in case something happens. I know that you're going to pay me you have enough money to pay me 2 months or 3 months, for example, right? So that is what reserves are. It's an entire month of PITI. Anybody knows what PITI? What is it? Yes. Oh, no, yeah, that's different. When we're talking about foreign investors, they require 12 months. Or 6 months, depending on their down payment. But we're talking about a doctor's loan, and it's like 2 months or 3 months. So it's pretty reasonable. Okay, this is super interesting. Remember that we're talking about high-end individuals, professionals, that they just graduated. Sorry about that. They just graduated from, medical school. Attorney school, law school, whatever, attorney school, law school, so they're going to have a hefty student loan debt. So with this program, since it's targeted to them, they do not take that debt into consideration. So that debt does not go into the debt to income ratio. So maybe that's a really big help keeping that 43%, right? So that's not considered. Now, if there is another borrower, like a spouse or a girlfriend, somebody else is going to be on the loan, and they have student loan debts, they do have to take that into consideration. It's only for the qualifying borrower that they do not use it, right? Last but not least, and then I'm going to open and we're going to do like a little bit in Q&A because I know it's a lot of information and I'm learning too. Like I have my guidelines here, but the lender pays the mortgage insurance. Mortgage insurance is what the banks, keep every month on any loan, less than 80%, less than 20% down payment on a conventional loan, on FHA. It's a mortgage insurance that is actually, the client pays for it, but the bank keeps in case that the borrower doesn't pay. It makes sense? The banks never lose. So they keep the insurance. You pay for the insurance, but I keep the money just in case. So this is very important because this is a 100% loan. So on a 100% loan, we're talking that this is going to be a substantial amount of money, especially on $1 million loan, $1.5 million, so and so on. The lender pays for that for your client. So it means that they're just going to have a principal, interest, taxes, and insurance payment, or HOA if they have, but they're not going to have in mind. But if they were to sell the house or to pay off that loan before 3 years, they get the money back. It makes sense. They're kind of like giving them that money. It's their safety. So it's called a recapture addendum. If they pay off earlier than 3 years or 36 months, they will take it out of payoff. When they sell the house, they just keep their money. Make sense? Okay. So this is the part that I like because, like I said, I can talk to you all day long about guidelines and this and that and debt to income. But what is important to me is how you can benefit from these programs that I'm here for. Because my goal, like I said, is to show you how you can make money, right? To show you how you can use these programs for your benefit. So, like I said in the beginning, one of the main things, one of the main benefits that I see in this loan is to build up a high-end clientele from the ground up. So if you help that student that just came out of medical school or of law school, and you help them with their first home with 100% financing, and you guide them through the process, this is going to be a client for life. And they're only going to make more money. So who's going to benefit from that? You are, right? You're gonna sell them the $300,000 house, but then you're gonna sell them the 1 point something and the 2 point something. Hopefully they do really well, and you're gonna sell them a lot more than that. So how to take this loan to your advantage? Increase your buyer pool. So like I always say, my role here is always give you more options, ways to look outside the box, not your regular black and white client, but like other people, right? So attract more qualified professionals who may not have an upfront cash or down payment. Faster sales process, less financial hurdles mean quicker transactions, higher commissions, higher properties, right? $1 million, you can make some substantial amount of money. You have a competitive advantage. You have a program that not everybody has, because not everybody has access to this program, okay? So you build a stronger referral network, like we were saying. Those people talk to other people. So if you help them, if you really are there for them, they're gonna refer you to their co-fellow students, co-fellow workers. You know, they're gonna refer you everybody. So this is a really good way to build on your referral network, right? So professionals appreciate the opportunity and refer colleagues. Maximize the market potential. Like I said, tap into high-income clients and professionals who are ready to buy and lack maybe immediate liquidity, which is a case for like when they're like fresh out of school, right? And like I always say, build long-term relationships. We are in the relationship business, right? And I know Ismael says it all the time. We are in the, we're not selling real estate. We're not in the real estate business. We are in the relationship business. We are in a business that not only we had to create our brand, but we had to really work our clients to build our network. So this is a very good way to do this, right? Creating like new opportunities for new clients to do this. So who can you offer this loan to? Like we were saying, young professionals out of school, university and college students, people that are studying in law school.
Before you continue,
the credit score? Okay, we talked about that before. It's 720, and we're gonna leave all questions in a little bit, but 720 for 100%, 700 for 95, and I believe 680 for 90. Yes, so who is a good client to do this? So young professionals out of school, university and college students, student organizations. You know, I was just talking to a CPA, and he gave me like, so I can talk to Alpha, Beta, Gamma, whatever, all those like fraternities, and you know, those are amazing places to start. Also, law firms, CPA firms, vet schools, hospitals, nursing schools, dental schools. And I keep saying schools because, like I said, the main benefit that I see in this program is to like, get them while they're hot, you know, like get them while they're like starting their life. But anybody can really benefit from this program. Let's say it's a doctor, somebody that doesn't own a property, or a law, or an attorney, or a vet, or a CPA, you can always do that. So.
My daughter boyfriend, my daughter, they just graduated, I think 1 year ago.
Okay.
And they have a good credit, and that's why I want to talk to you about.
That's a very good question. We'll run the scenario maybe later. That's great. That's good for you. So, what should you do? Let's try to. Yeah, I'm getting to questions in a minute. Write them down, please. We're getting to questions in a minute. So, what you can or you should do, right? And we always talk about this. What is the best way that you can put yourself out there? Anybody? Social media. It's free. You know, and it's the best way to like really build your brand, to reach new people. And like I said, you have a program that not everybody has. Most people don't know about this program. So that's why I'm commending you for being here today, and the people that are actually, you know, working on, you know, watching us through YouTube, because they can actually benefit from this program. Put it in social media, and I'm gonna talk about it because I can give you brochures, I can give you marketing materials, I'm gonna talk about it in a little bit. Another thing that you can do is host educational webinars and seminars. You know, get with me. I can give you all the tools, all the information, and you can actually do presentations about this program, you know, to institutions, to firms, and get these clients. Also, and very, very good one is network with professional associations. I know that a lot of us do marketing madness, that we go to these events, but events are a great way to really put yourselves out there as the specialist, as the professional in these fields. So you should definitely do that. And another good way is collaborate with HR departments. Like if you know HR departments, it's always a good way in, because they know what's going on with everybody in their organization, right? So How many here know an attorney? Anybody here knows an attorney? A CPA? Okay. A vet? No, you don't know a vet? Oh, I mean, I know several. Okay. A doctor or a medical student? Okay. A chiropractor? An optometrist? A dentist? A nurse? So do you think they will be interested in knowing, how they can buy a home with no down payment? Right?
Yeah, sometimes it's good, but sometimes the monthly payment is coming high when they don't have nothing,
But they don't have to have the money out of pocket, which is the benefit.
They don't have another choice, it's good, yeah.
Yeah, absolutely. So, like I was mentioning before, I'm here to let you know, I'm a resource to you. I'm a tool in your toolkit. Use me, same as you use, Sonia, and same as you use the title partner, same as you use, the media group. Use me as a resource. You have resources. We have an in-house specialized mortgage professional that can help you. Let's say that you have like a good account or a good opportunity. I will gladly go with you. I will do a Zoom with you. Use your resources. Leverage your resources, okay? Your clients, seminars for potential clients, like I said, we will give you fast approvals, fast closings, and happy clients. And that is the whole idea, right? So now we're gonna open it for questions, and I know that we have a bunch, or scenarios if you have anything that you wanna add or you wanna know. Like I said, I'm learning with you because this program is brand new. But again, that's the reason I told to Ismael, I'm like, I want to present this program because I believe it's an amazing opportunity for you guys to really leverage this, like talk to everybody, and see who can benefit from this. In the weeks before, we talked about first-time home buyers, that it could be, somebody that maybe doesn't have this background, right? We have programs pretty much for everybody, but this is going to be a very good opportunity for you guys to build a high-end clientele, And you will be surprised, but the day I have a group, I have several groups like in WhatsApp. I have a Latinas group, and I have like another Empoderadas, and I have another one for real estate. And they called me with attorneys on the phone, that they wanted to learn about this program. So imagine that. So just put it out there. You never know, and work it because you really will benefit you. So tell me a little bit about your daughter.
They both have a good credit.
Mike.
Okay, they both have a good credit, but they want to put a down payment because, the same I told you, the monthly payment is going to be high if they don't put nothing.
Okay.
What about the closing? Do you guys care about the closing and money or anything, or no? They need to find the money for the closing.
Okay, so that's a good question.
Mm-hmm.
No loan, okay, so basically other than that Hometown Hero grant, that kind of stuff, the money with down payment assistance programs or 100% financing usually is for down payment. So remember, for a regular loan, down payment comes out to be like 3%, an FHA loan is 3.5%, right? So this way, they don't have to come out of pocket with any money. Closing costs are usually about 3 to 4%, maybe even less, depending on, because you have to consider taxes, you have to consider insurance, you have to consider all those things. But basically, if they save a little bit of their money, right, they can buy with basically no cost. Because, like, I don't know if you've been in my classes before, but one of the things that I do teach the realtors is how to negotiate for the seller to maybe contribute with closing costs.
Yes, I know.
So if you have a loan that gives you 100% financing, and then you have maybe a little bit of contribution, the client pretty much don't have to come out of pocket with any money. And that is the beauty of this program. I understand that maybe the payment's a little bit higher, but not really, because remember that they don't have to pay mortgage insurance.
Yeah, that is good.
That is very good. Yes. Okay?
Hello? Okay. The other question is, the program is qualified for the pre-construction for the new house?
Yes, it should be okay. It should be okay. The thing with pre-construction houses, and that is a good question, is that sometimes the builder, not the lender, not the bank, no nobody, the builder requires down payments while the property is built. Yeah. So let's say, oh, you want this property? Great, give me 10% in reserves. And then in 6 months, give me another 10%. You see what I'm saying? So that is and then at closing, when the property is ready to go, then we can come in and we give them 100% so they get their money back. But in the meantime, they have to have the money to come out of pocket.
Yeah, they want to do that because her contract is expired in June.
Oh, okay.
So
Okay, that's a good
what
one.
we can do.
All right, absolutely. Any more questions? In the back. Pass it to the back, yeah. Thank you, thank you.
Nice question.
Sure.
No, I have a couple. His wife is not quite nurse, but she's working in the hospital with patients.
They have to have the license.
Yeah,
they have
she
to be
has,
a nurse practitioner.
But my question is,
Not an RN. Yeah.
is the husband is fire department?
No.
They don't when they
Doctors.
Doctor.
Veterinarians, optometrists, a medical doctor. It cannot be a psychologist. It has to be a medical doctor, a vet, a CPA, or an attorney. So it has to be an actual professional to actually take advantage of this program. It's very specific. The list is there. I will provide you the list too. I'm going to put the poster everywhere. Another thing with the resources that I gave you. Yes, I put this flyer I put in the group chats that we have for partnerships, because you can actually take that flyer and download it and put your information on the side. You cannot see it there because I moved it to the side, but on the side is the logo for Partnership Realty and is your information, your phone number, and you can put your picture. It's a little spot for your picture, and you can use this on your social media. You can promote this program already. It has all the information. It has all the qualifying positions. Yes, you're going to get people that are going to say, oh, but a firefighter, this and that. And to answer your questions, we can qualify him for another program in the back. No, he's not listening to me. We can qualify them for a different program if they have, if they have income, if they have credit. We can do 100% financing, 101% financing, but not this program. Not this particular one. So now, I want you to tell me, okay? And I have like 5 little gifts here. Okay, the interest comes out to be like similar to a conventional loan. So right now it's like on the 7 something. Yeah.
It's a little higher, but what about if they qualify for FHA with the interest loan?
Okay, they can always do FHA, but they're going to have to pay MI, and FHA MI is really high. Right? So then again, that's a good point, because they could always probably qualify for an FHA loan with 3.5% down payment. Here is 100%, right? And let's say that they do the down payment assistance. It's 2 loans with an FHA, and you still have to pay mortgage insurance. So you have to qualify for both loans, pay mortgage insurance. So let's say the rate is a little bit lower, but you're going to, and to answer your question, we can do the numbers. We can do the numbers, and we can see what's going to be the best way to go, right? So now, what do you think, without looking at the screens, it's a good way for you guys, like who can tell me, what do you think that you can start doing today to get more clients with this program? Oh, I know, this is too complicated to pass along. Okay.
You just said it, put it on the social media, Facebook, Instagram, TikTok, all of that, and then personally I will call people that I know in the business of the program Realtor, and just explain it to them.
Absolutely.
And also, visiting hospitals.
The thing is, online nobody can.
Nobody can hear? Oh, okay.
And everything. First of all, put it on the social media. That is
Right.
the best way, fastest way to get people.
Right.
And calling personal friends or person that you have business with, doctors, nurses, lawyers, everybody that you know, you can offer it. And maybe you can even tell them, just help me, and maybe you can put on my flyer in your office. And last thing probably will be good too, it is visiting places, even if you don't know the person, you can go and say, listen, we have this special program, can I do something with your business, and, partner relationship, the way you said it,
Yay! Aplauso! No. Sorry. You're gonna have to pass this along. Okay, another one. Who can tell me more ways that you can really benefit from this program? Just that? Just that? Come on, you have ways. No? You have ways.
Especially, what we say to call in my professionals, like
Right.
that, my CPA, and I have a good relationship, with them. That way we can, reveal this kind of program.
Yes.
Because some people doesn't know about these things.
Nobody knows about this. That's what we're doing here
Right.
today.
That's
That's why I'm here today with
very,
you.
very-
Nobody knows about this.
Very
So
impressive about this program.
yes, so it is your job as a professional, and that's what I'm saying. I keep repeating myself. I'm commending you because you're here today. You're watching this. If you're watching on YouTube, you're here today. You're putting your time to learn about these new ways how you can separate yourself from everybody else. Nobody knows about this program. So yes, please pass it along if you don't mind.
Thank you.
Yes, and another thing is remember, you have both said about going to offices. These people, right? So let's say that you go to a doctor's office. They have interns. They know people in the hospital that they're grooming to come work with them. So they, if you know your doctor, and everybody here has a doctor, we all have a doctor, right? We are mothers, we have doctors that have delivered our babies, and we have a very intimate relationship with. So you can ask them, hey, are you planning? And I've known firsthand, brand new people fresh off school that are doing that. So if it doesn't happen, at least you get to put the word out there. That is your job, to put yourself as a professional. Now, who here knows, okay? Let me see. Who here has ever done like a seminar, like a Zoom seminar for a group of people? Okay, right? Okay, and what are the results? Right. Right. So we keep going back. We have a tool nowadays that nobody else has. We didn't have before, which is social media, YouTube. We have so many platforms that we can really do. Zoom. So I can give you a little tip. Let's say that it's a commitment, like everything that we do, right? I'm committed, I committed to Ismael to come here and do these seminars for you. It's time. I'm very busy, but I have to take time to really put this presentation together to make sure that you know these programs. But it's a way to let you guys know. The same way you can actually host seminars and Zooms, and even if nobody shows up, you record them and you put them on your social media. And I promise you, if you do this consistently, people will show up and they will call you because you are the one that knows about these crazy programs that nobody else is talking about. So it's a really good way to do this. Go ahead. Mike.
Question.
I only get 2 people talking. I need more people talking here. I have 3 more candies to give. And I don't repeat.
The PMI, the bank will keep paying until the 20%?
What?
The PMI.
Mm-hmm.
The bank will pay.
They will pay forever.
Forever.
They will pay forever. So you don't, it's not like they pay forever. You don't have to, the client doesn't have to pay ever.
Okay.
The only way that the client pays is if they sell the house
Before 3 years.
before 3 years.
Got it.
Good. Now, what is the credit score that they have to get 100% financing? Somebody knew?
20.
She said it. She doesn't have candy. Okay. So, what is the debt to income ratio that they have to be to qualify?
43.
Yay! Okay, one more. Don't need it all at once. Okay, so what is? Let me see. Let me go back to my guidelines and see. Oh. How many properties can the borrower have to qualify for this?
Buyer.
And how many properties?
First one.
None, right? Just the first one. Yay! She said, one unit. They can only have 1 unit. Well, guys, like I always, I really thank you for being here. I wanted to keep it short. It's a one program, so I just...
That's I don't hear, so...
No.
That's I don't hear because I come in a little late because I don't know it's only one.
Yes, it's 1 unit, 1 unit. And again, I can actually I can send you these guidelines you have, which is the next slide actually. You know, I want you to scan my codes. The one on top is my WhatsApp. WhatsApp me whenever you want. I can answer your questions. I can send you the flyer. I am here to answer any questions. The one in the bottom is my Instagram. If you want to tag me when you do your flyers, I would really appreciate it, and we can help. We always tag Partnership Realty too. So I'm here as a resource. Use me. You don't have to know every detail of every loan. What I'm trying to do here is giving you new opportunities that nobody else has, you know? So, Patricia. Well, thank you guys. Give yourself a round of applause. Thank you. Have a good one, everybody. Bye. And cut.